Today, we're going to break down some really important money topics in a way that's simple, friendly, and actually fun. We're talking taxes, banks, interest, inflation, investing, and even the secret behind building real wealth over time. Grab a coffee, get comfortable, and let's make sense of your money. Taxes. Picture this: you just worked a hard month, maybe flipping burgers, delivering packages, or hustling at your job. You get your paycheck and, wait, what? You were paid $2,000, but your bank account only shows $1,456. You scroll through your pay stub: federal tax, state tax, Social Security, Medicare. It feels like someone's taking a big chunk of your money while you're asleep. And yes, that's taxes. Here's the deal: taxes are the cost of civilization. They pay for roads, schools, health inspections, and yes, even billion-dollar projects you'll never see. There are many types of taxes. Income tax, what you earn. Sales tax, what you spend. Capital gains tax, what your investments earn while you sleep. Social Security and Medicare, a forced way of saving for retirement and health coverage. Filing taxes can be confusing. Some people pay monthly, some yearly. And some forget entirely and end up in documentaries. The upside? Countries with higher taxes often have a higher quality of life. And hey, at least it's helping society run smoothly. Banks. Now, let's talk banks. You walk in, hand over $1,000, and think it's just sitting in a vault. But actually, most of that money is already out there lending to someone buying a jet ski, a car, or a house. This is called fractional reserve banking. Banks only keep a fraction of deposits because not everyone will withdraw all their money at once. Banks make money by lending your money at higher interest than they pay you. Why deposit money in a bank? Convenience: easier to pay with cards and transfers. Safety: deposits are insured up to $250,000. Interest: your money earns money. Interest is money's way of charging rent. If you borrow $1,000 at 20% interest and miss a payment, your $12 burrito can turn into $50 of regret. Ouch. But on the flip side, if you invest at 7% compound interest, your $100 can eventually grow into thousands or even millions. Interest is like a silent engine. It can make you wealthy or bury you in debt, depending on how you use it. Pro tip: pay off high-interest debt fast, and let your savings grow with compound interest. Inflation. Ever bought a bag of chips and noticed it costs 30% more than last time? That's inflation, money slowly losing value. Causes: too much money chasing too few goods. Supply chain problems. People expecting prices to rise, so they spend more. A little inflation is normal, around 2% a year. But if it spikes, your savings lose value. Governments fight it by raising interest rates, which cools spending. Recessions. Recession sounds scary, but it's just a reset. Jobs vanish, markets drop, people save instead of spend. Why? Could be high interest rates, global crises, or just the natural economic cycle. Think of it as the economy's way of hitting pause and saying, okay, let's recalibrate. Credit scores. A credit score is basically a trust score. It decides if you can get a house, a car, or if you'll pay 27% interest on a TV. Key factors: payment history, credit utilization, age of accounts, credit mix, new credit. Treat your credit score like a pet dog. Ignore it, and it causes problems. Take care of it, and it opens doors. Currency and money. Money itself is kind of not real. It's a social agreement. A dollar has value because we all believe it does. Governments print it, central banks regulate it, and people trade it for goods and services. Too much money printed? Inflation. Too little? No one can afford basic living. Investing. Now, investing is how you fight inflation and grow your money. Instead of trading time for money, you let money work for you. Main ways to invest: stocks, tiny ownership in companies; bonds, lending money for interest; Funds, collections of stocks and bonds. Real estate, properties that generate income. Investing isn't luck. It's about being early, diversified, and patient. Compound growth over decades is the real secret to wealth. Value. Value is what drives money. Think gold, a shiny rock is worth more because humans assign value. Provide value to people, and you can earn wealth. That's why doctors, lawyers, Steve Jobs, and brands like Gucci make money. They provide something people perceive as valuable. Time. Time is the most valuable asset. Most people trade it for money, but the richest leverage it. The longer you invest, the more your money multiplies. Ordinary people with modest paychecks can retire with 7 figures if they invest consistently over decades. Audience engagement moment. Now, I want to hear from you. Drop a comment down below. What's the one money topic you wish you understood better? Taxes, investing, interest, or something else? I read every comment, and I love seeing your thoughts on the Eddy channel. Closing. So, to wrap it all up. Taxes keep civilization running. Banks make your money work for others and for you. Interest can be your best friend or worst enemy. Inflation slowly eats your savings, but investing fights back. Credit scores are trust scores, not wealth scores. Money and currency are social agreements. Investing and compound interest build wealth over time. Providing value and using your time wisely is the ultimate secret. Remember, building wealth isn't about luck. It's about knowledge, patience, and consistent action. If you enjoyed this, don't forget to hit the like button and leave a comment with your biggest financial question. We'll explore it in future videos here on Eddy. Thanks for watching, and see you next time.